Hello and welcome to this Tuesday's morning market briefing. We've got lots to talk about. Firstly, the US and Europe are seeking to dissuade Israel from striking back against Iran. As well as that, Tesla is to cut 10% of its global workforce. We've got lots to talk about on the charts. Also, with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it though, make sure you subscribe. The first article to talk about is to do with the US and Europe and Israel. Now, of course, the US and other European allies are now engaging in an effort to dissuade Israel from retaliating against Iranian strikes over the weekend. This comes as the IDF's military chief vowed to respond to Iran's drone and missile attack. Now, of course, this has been a topic of great importance that we have already kind of covered in yesterday's morning market briefing, actually weekly market briefing, where we did, of course, kind of talk about what had happened over the weekend, and we spoke about how Israel at that moment was then starting to consider what operations they might then embark on against Iran over the coming week. What article here, though, that we're talking about is ultimately to do with the US and Europe trying to dissuade Israel from basically taking on an operation which might seek to basically escalate the conflict into one which maybe is a regional war or something like that. And that's a topic which we've actually been talking about for a very long time now. Of course, we've been covering this conflict since October the 7th, when this kind of entire proxy war between Iran and Israel did begin. And of course, following that, we had then numerous operations by Iran as well as Israel. And ultimately, whilst we have seen Iran only really operate using their proxy network, so using either the Houthis or Hezbollah or Hamas to attack Israel over the years, Saturday night was kind of the first time ever that Iran had struck Israel from their own territory. So they had fired missiles at Israel for the very first time from their own territory. And this was kind of groundbreaking and very surprising news, which led many to believe that that we were now going to see a serious escalation. And this has been something that, as I kind of lost my train of thought on, this is something that basically we've been talking about for a very long time and has been a very important point of discussion, because ultimately, should a regional war break out, say Israel and Iran do go head to head in a full-blown conflict, we're likely to see the likes of Syria and Iraq probably join forces with Iran based on their alliances currently. Added to that, we've got Hezbollah in southern Lebanon. That will also join the fold. We've then also got the US and UK, which have already been involved, apparently, in shooting down Iranian missiles that were heading towards Israel. So we're likely to see their involvement in such a conflict. And of course, the most worrying kind of is if someone like Saudi Arabia then somehow gets involved in it. As ultimately, not only does Saudi Arabia make up a great deal of oil exports from the region as a whole, but ultimately, Saudi Arabia is kind of this regional enemy of Iran based on religious differences, and therefore we could definitely see this kind of regional war, this could definitely break out should Israel now embark on a very serious operation against Iran. And we've already heard from Israel, or at least we've seen speculations from certain analysts and that kind of thing, that should Israel take on an operation which they're looking to destroy Iranian targets, it's likely that we'll see those nuclear facilities which everyone's kind of been talking about over many years be struck, as well as a great deal of military infrastructure as well, which isn't what we really don't usually see in the modern day against Iran and that kind of thing. We usually just see the proxy networks kind of fighting. So this is an incredibly important article on a very serious topic. And should this break out, the market ramifications is, of course, dramatic. I mean, we've spoken about this many times, but ultimately, going back to our old price projections for oil and that kind of thing, back when, you know, we were talking of a regional conflict maybe last November in 2023, you know, we were talking of oil possibly rising to levels of $150 a barrel should a full-scale regional war break out, as ultimately you're cutting off the key supply of the world oil-wise, and that is the Middle East. And so ultimately this is an incredibly serious moment where, you know, Europe and the US are trying to plead with Israel to basically not escalate this further after Iran obviously escalated it massively. So, you know, we're kind of in this situation now where if the US and Europe don't intervene and prevent, you know, an overwhelming retaliation from Israel, we could definitely be seeing, you know, oil's price skyrocket, the dollar skyrocketing, gold skyrocketing, and these you know, assets are already at kind of all-time highs, or, you know, kind of recent highs. So, you know, prices for these assets are in also a very interesting position, and overall the situation is you know, one which is very, very serious, as I've said many times. But ultimately, the US Secretary of State Antony Blinken and British Prime Minister Rishi Sunak both stated that they were in the process of curating sanctions for Iran. This is all in an effort to prevent an escalation within the Middle East, which might risk a regional conflict. Saturday's drone and missile attack by Iran saw over 300 missiles, rockets and drones be fired at Israel in an effort to strike Israeli military targets. Iran is already heavily sanctioned by the West, however, and Israeli Western allies, seem to be putting in a greater effort to now sanction Iran entirely following the bombardment. Despite such efforts by Western allies, a chief of staff for the IDF signalled an Israeli strike back against Iran was coming, with this coming as the Israeli War Cabinet once again meets to discuss the response options. The IDF Chief of Staff Halevi warned Iran, saying that Israel could act forcefully against Iran in places near and far, basically warning that Israel could strike in Iranian territory, where we do of course know that there's a great deal of kind of important military and nuclear sites. During the Iranian attack, the US, UK, France and Jordan all assisted Israel in shooting down the incoming projectiles, which also leaves those planes, those ships that were all using their missiles and equipment to shoot down those projectiles, all leaves them also at risk of kind of becoming involved in this conflict, being shot down, bringing their nations into the war. And that's why there is this significant risk of a regional war breaking out. That's all to talk about in this article, though. Definitely keep your eyes on it. Very, very important, and one I think we're actually going to be talking about over the next coming weeks quite a bit. Next article to talk about, though, is of course Tesla and its cutting of 10% of their global workforce. Now, Tesla is now set to cut 10% of its total workforce, that being 14,000 jobs. This comes as the worldwide EV slowdown and price war hurts Tesla's dominance. Now, this is most certainly one that not the first time that we've spoken about Tesla on this channel, nor is it the first time that we've spoken about this serious EV slowdown, with I think the most recent article that we spoke about on the topic being that one around those EVs, the EV cars, and the new cars basically being imported into Europe, basically piling up at ports as they ultimately do not have the supply chain infrastructure to reach their end point. And basically now we're seeing these European ports in the Netherlands and elsewhere basically pile up like a parking lot, a car park full of these EVs, and ultimately this is kind of creating this serious issue now, which is weighing both on the supply chains and also the car companies. And of course the key issue within the supply chains at the moment is ultimately there aren't the actual truck drivers, lorry drivers to drive these cars to their endpoint within the supply chain, and thus they're left there. As well as that, we're not seeing the usual demand for these EVs. The reason why being, of course, not only are we currently kind of dealing with higher levels of inflation, which is weighing on most consumers' ability to purchase a new car, but also, of course, we're seeing greater competition emerge within the EV market and car market in general, and as a result consumers are now opting to just hold on to their cars for longer than they usually do, and thus not buy these new and expensive EVs. And an added issue which seems to be growing for these EV companies is this competitiveness within the industry from new Chinese companies, which are frankly getting the job done cheaper, producing at a similar quality, with Elon Musk assuring stakeholders by arguing that this move will make Tesla more lean, innovative, and hungry for the next growth phase cycle. Other car companies and companies from across the supply chain around the world are also slashing jobs and costs. The EV slowdown is specifically hurting Tesla since it exclusively makes EVs. Since the slowdown has started, and started hurting Tesla, shares have declined within Tesla by more than a third over the entire year thus far, with this stock performance making it the second worst performer in the S&P 500. In complete contrast, Toyota's stock has rallied more than 44% over the same period. The slowdown in the EV market is largely coming from China, which is the US EV makers' second largest market by sales, and competition there is also heating up between local EV makers and foreign car makers, making Tesla's share in the Chinese EV market, causing the Tesla's share within the EV market to drop. So ultimately, very significant news also from Tesla, and one which is definitely going to be weighing on these key US equity indexes such as the S&P 500, like we just spoke about, which adds to a perfect transition now into the charts, as we've spoken about all the stuff on the articles just now. And of course, we are beginning on these key US equity indexes, more specifically, of course, the Dow Jones, the US 30, which has been in a very interesting position recently after a great deal of moves and ultimately a great deal of bearish performance, and as we've said many times, and I introduce basically every charts moment section, the charts section in every morning market briefing, the same really in regards to US equities, in the fact that basically the Dow Jones and US equity indexes has been struggling recently as a result of the change in the Fed's rhetoric. We know, of course, that Jerome Powell and others at the Fed are now leaning far more hawkish than they were earlier on in the year, and especially ending off last year. And as a result, traders are now only expecting maybe one or at most 0.25 percentage point rate cuts, which kind of brings the Fed's rate cutting cycle to the very end of the kind of period of beginning that rate cutting cycle, if that makes sense time wise, with both the ECB and Bank of England seemingly being expected to cut rates now and start cutting rates earlier than the Fed. So a very serious situation facing US equities as a result, and this is why we're now seeing the kind of sell-off take place as traders do price in that added kind of borrowing costs that are going to be facing these key US equities, and as a result not only the key added costs but also the lack of ability to expand and that kind of thing, which weighs on a US stock basically. So that is what we are seemingly looking at here on the US 30, as for what we've seen as we've started off the week, though, ultimately we have seen price kind of move up yesterday and tap this 38.20, which we did highlight as this key area where we were expecting price to possibly retrace to. We also said the 50% Fibonacci retracement level was another key area which price could retrace to. We didn't see price make its way all the way up there, and instead price only made its way to that 38.20 before then continuing that sell off. So that's the key situation for the US 30, and it does seem like we're now continuing this sell off to the downside, and we could be looking at price reaching this key Fibonacci extension level down around those levels last seen in January of this year. So the amount of bearish momentum we've seen kind of in the markets in such a short period of time really kind of explains and provides context to the way markets do move. That kind of period, that slow movement that we usually see in stock markets over time can quickly be taken away and destroyed in a short retracement, and that is kind of what we're seeing here. So very significant moves taking place for the US 30, and lots to keep your eyes on. Next to talk about though is of course the dollar, which is continuing this strong kind of bullish rally that we did of course start to see form after that kind of, pardon me for that change in rhetoric from the Fed in regards to when they might start cutting rates, and that's why we are seeing this kind of push to the upside. An added reason though for this kind of bullish momentum is of course the kind of world tensions that we're seeing. As we spoke about in the first article, the chances of a regional war within the Middle East is causing many investors to go to the markets and buy up these safe haven assets. And frankly, the dollar is one of those. The dollar is the powerhouse currency of the world, is arguably the safest currency to then put your money in, and as a result, we're seeing investors kind of buy up the dollar to protect themselves in this time of high world tensions. So lots to think about there for the dollar, as well as price does make its move towards this Fibonacci extension level. That said, price hadn't retraced to these levels, which we were maybe arguing that price could retrace to before then continuing higher. So keep that on your mind, as well as price is currently overbought in the RSI at the moment. Next to talk about though is of course Euro USD, which of course mirroring the dollar is kind of pushing to the downside. That said, we're not seeing as much bearish momentum on Euro USD as we're seeing bullish momentum on the dollar, and that is arguably because we are getting some very key Eurozone data this week, with today we're receiving the Eurozone and German economic sentiment figure and also Italian inflation rate figure. So two kind of very important economic data figures from Europe, which will be definitely affecting the Euro USD. Added to that, we're also getting the Eurozone inflation rate figure this week as well, which is definitely going to push Euro USD one way or another. So that's arguably why we're not seeing much movement on the Euro USD at the moment, but still lots to keep your eyes on. Next to talk about though is pound yen, which is currently just ranging around. We're not seeing too much clear movement either to the upside or downside. Once again though, just like on the Euro USD, we are getting both the British and Japanese inflation rate figure this week, so arguably that's why we're just seeing price range for the moment. Next to talk about though is Bitcoin, which is just seeing this kind of sell-off now take place, with price kind of dipping down to the kind of $63,000 a Bitcoin level before bouncing back up during the day, and we're seemingly ending off there right now. Ultimately though, the question will be whether the Fed's rhetoric and that kind of thing is weighing on Bitcoin's movements, and whether the hype can just beat what the Fed is saying ultimately, as that is kind of what is shaping up in the markets. Next to talk about though is gold, of course, which is continuing this push higher, and we were expecting this to take place, of course, since we are seeing this kind of increase in world tensions as a result of kind of the risk of a regional war breaking out within the Middle East is very likely. So as a result of that, we are seeing this bullish momentum once again enter gold, which is already at these very overpriced levels. So ultimately, gold is beating the odds at the moment and continuing this push higher. Lots to think about though on gold. Lastly to talk about in the charts though, and arguably most importantly, is of course oil, which, linking back to the first article, is in a very interesting spot, as ultimately, should a regional war break out, oil's price is likely to make that move to the upside in quite a significant fashion. And for the moment, price is still at these kind of higher levels, which price moved to once traders started to price in the risk of Israel kind of it started to price in Iran's retaliatory attacks against Israel. And currently we are waiting to see what is to happen within the Middle East, and whatever does happen, of course, will cause oil to move one way or another. That's all to talk about on the charts though. Lastly to talk about, of course, is the economic calendar, where we're getting an insane amount of very important data today, so listen out for all of this to come. Firstly, we are getting the Chinese GDP growth rate figure, as well as the retail sales figure from China, followed by that the Chinese industrial production figure and unemployment rate figure, followed by that the British unemployment rate figure, and then the Italian inflation rate and balance of trade figure. Within the Eurozone as well, we're getting the Eurozone and German economic sentiment figure, as well as the Canadian inflation rate figure and the US building permits figure, and finally the US industrial production figure. So lots of data to listen out for, lots to look out for. Cover lots on the articles, lots on the charts, and lots on the economic calendar. That's all from us at Wildwood Capital. Have a great one. See you later. Bye.